morning guys, this is Hina and thank you for tuning in. If you're new to the channel, feel free to subscribe. I am a CPA and I intend to do these videos in terms of your financial, tax and retirement, business planning, running needs in the most simplest form out there. Unlike a lot of other people, I don't plan to be very serious. I am not one of those people. We will keep it the meat on the topic, but light to the point and the simplest way you can understand the concepts. So let's get on with it. The video today is about something all of us at some point in our life probably have done: work for ourselves, self-employed, Schedule C, sole proprietors. This form of business is one of the simplest that you can start with. There aren't any formalities, nothing that you really have to register. You can just get up and start working. There are a few things: benefits, negative, audit issues, retirement planning. Of course, everything comes under this business as well. Just like any other, at the end of the day, it is a business. So I plan to go over some of those things. We will keep it short, nothing much or as complicated as some of the other forms maybe. So let's begin with that. How are we going to set it up? You just start working. There really is not any formal setup required to be a sole proprietor or a Schedule C filer. It is, it could be a service industry, a gig worker. Seems like, that's the most popular form out there these days. And you just basically start working. Either you are doing it for yourself, you are the one who is creating inventory or product for people, or you are doing a service-based like Instacart, your Lyfts, or any of those, the rabbit task rabbits. So whatever it may be, you can just start doing it. The biggest problem I see with Schedule C filers is just the fact that when it comes to filing return, keep in mind, whatever you're earning, you're not paying taxes on it. So unlike schedules, unlike your W-2, or if you're an employee of someone else, where you are paying your Social Security, your Medicare, deducting federal and state tax as well, nobody's doing that for you here. It's your responsibility. So make sure you put aside whatever you're earning towards your taxes. They have to be paid. So there are two ways to do it. If you want to do a lump sum towards the end of the year, sure, you need a little more discipline for that, because you could see a pile of money sitting on the side, you want to spend it. But nope, you have to keep that on the side, because come tax season, that's where you will be paying taxes from. Or pay estimated. I personally like it because it's a smaller chunk at a time. It's not a bigger bill when you do the return. And also, when you do not file your taxes throughout the year and you do your return at the end of the year, it will result in some tax and penalty, because technically those taxes were due as you earned the income. So if you can, you might as well, I suggest, pay the taxes quarterly. You can easily pay it through the government websites directly. There's no really need to send out a check or use a voucher, but if you can, or if you want, please go ahead, do it. But you can at least pay it online. It's a simple setup. A little portion at the end of the day will add up, and it'll be a lesser bill come tax season. So that definitely is a good way to go. Again, in terms of reporting, it's when you file your 1040, that's the individual tax return, you do a Schedule C. And again, it's your income, either a 1099 miscellaneous you got from someone else that you were a consultant independent contractor for, or if you were mainly a cash person, you pick up how much you paid or you made in terms throughout the year for in cash and report that income. Expenses, keep in mind, whatever it took for you to earn the income is deductible, be it your mileage, your advertisement. Even if you did, spend like, I don't even care, like $10 on Facebook advertisement, that is $10 you spent to get that job or get yourself out there in terms of promoting yourself. That's an expense. Your internet, your phone, again, 100% these expenses will not be deductible because let's be realistic, you are not using internet and phone 100% for business. If you are, sure, go ahead and do that. Most of us out there are not doing it. So a certain percentage of that will be deductible. If you are doing something that is from home and you are using portion of your home exclusively towards that, again, that is deductible. You will, there's a certain calculation that goes into it, but be it a rent or mortgage, portion of that will be deductible towards the expense. Keep in always mind small expenses that we all incur. Printing, we have, like I already mentioned, advertisement that you may do. You may have postage if you are sending, let's say, your bill to a client, or you are sending material or buying material, you're using postage. All of that is expendable. Mileage, you're running errands, or you yourself have to go meet a client, do an errand for them, deduct the mileage. Keep in track. Meals and meals while you're doing your job are deductible. The one definite idea on the meals and entertainment and mileage I would suggest is keep the receipts. Mileage, keep a log. Just buy one of those dollar store, I don't care, something that, such and such date you travel point A to point B, this much mileage. If you have a receipt for the meal that you had that day, keep it. I'm not a big person on receipts these days. If you have a dedicated credit card that you're using that we can track later that all the expenses on the credit card were for your business, that's fantastic. That's enough proof to begin with. But mileage, definitely there. IRS can get a little strict about that, so make sure you are recording your mileage correctly. What else? Of course, these things do. This form of business is 100% your liability. So make sure you are covered. Get the insurance going, because when you are a sole proprietor, there is no, your business doesn't have an independent standing. It is integrated with you. So you certainly want to have liability insurance. It is not that expensive. I'm sure, look it up. You can get a decent coverage and you'll be surprised how cheap it can get, a basic liability. So make sure you have that. Some of the things that I want the clients, or some people who come to me with an audit issue, or people who get audited, these are going to be pointers to avoid those audits. The biggest and a no-brainer is a rounding number. Seems like everything is rounded. I made exactly, $12,000, $22,000. I spent, my meals were exactly $100. My mileage was exactly $300. My supplies were exactly $400. That's not how it works. Even if you go to a restaurant or we buy one small thing, it's never a round number. That's a huge giveaway, a big audit. You're literally asking for it. So make sure you do not, just for the convenience of it, use the rounding numbers. Always have an actual number. You may round it up or down, the dollar or two, however you think it would be, but do not round it up to the 000, everything. The other one is, seems like you were 100% wash when it comes to your business. You made $30,000, you expensed $30,000. That's quite convenient. Asking for an audit, are we? That certainly is another problem in terms of planning. Life is not that simple, and neither are the taxes nor the business that you're running. So you may be closed, you may not have made money, but you literally having the same expenses as how much you made is nearly impossible. I shouldn't say impossible, but literally is. So don't make those mistakes. Make sure if you have a loss, you have a loss. If you made, you netted $200, I don't care. But expenses to income being exactly same is definitely an audit risk. Of course, record keeping, and that comes down to your mileage and meals and entertainment. I already discussed that. Make sure you keep your receipt, you keep your log for a travel, and we are good there. Home office can be audited as well. make sure you have record for it. You have a dedicated space. You have, it's not like you just can pick up a laptop and sit anywhere. You need a dedicated space to do your job. And as long as we can prove this, we'll be fine. Having an audit is not a problem. We all get them throughout a year, through our life. But the only issue is we have to be prepared for it when they come calling. The interesting part of sole proprietors are also having to get some benefits for tax planning, for retirement. And this one gives you that opportunity too. Besides having the regular IRA, where you can put about $6,000 right now, $55,000 to $6,000 a year towards your retirement, there is a SEP IRA. That's for self-employed people. The good thing about that is we can literally put $56,000, up to $56,000 a year in that. And believe me, that adds up. Certainly, it's a calculated number. You just can't. I mean, it's not like you made 60,000 and you put 56 in retirement. That's not how it happens. It's a ratio between 20 to 25% of your net profit. But at the end of the day, you can, as long as the calculations work, go up to $56,000 a year. And that's certainly a benefit, that's hard to ignore. So in terms of everything when it comes to a sole proprietor or a Schedule C filer, I think I did cover. If you have any questions, feel free to leave me a comment or ask the question in the comment section, and I will get back to you, reply in my next video. Again, please do subscribe. Hope you guys understood the situation, the Schedule C better than when you started this video. And if you did, please do like and subscribe. In my videos, I like to end them on a positive note, a quote that uplifts the spirit. So this one is by Helen Keller, and it says, "Keep your face to the sunshine and you cannot see the shadow. We keep the negativity out and we roll on with our lives." You guys have a good day, and I'll see you in my next video. Take care.